Hey, what's going on, guys? Welcome to another video. My name is Richard Moglin and I post about stocks, investing, financial literacy, all that good stuff. And today what I want to do is kind of do a wrap up of 2019 and focus on the best and top performing stocks of this year, and look at their charts, look at what made them successful, look for possible entry points. And we're going to do all this research to kind of take some key conclusions and hopefully apply it into 2020 and improve our trading. So what I've done here is I'm in TC2000, and the scan that I've done is designed to kind of minimize kind of penny stocks. And all I've done, the only restriction I have is the close 250 days ago has to be greater than $10. So I want to focus on stocks that I would actually be looking at, and I don't buy anything under $10. And from that point on, I've made a column that basically is the change year to date, and we're going to look at a couple of the top stocks and look at their charts. So the stocks that I'm going to be focusing on is everyone that's flagged. You can see that some have advanced an extraordinary amount of percentage points, but they're mostly based on big gap ups due to earnings with biotech. So those aren't really stocks that I focus on, and that's why I won't be covering that in this video. To get into these stocks, you really just kind of have to be lucky and just kind of own the stock when it gets bought out by a big company or when it releases that key drug. So all the flag stocks are what we're going to be looking at in this video. And before we actually dive into the charts of each of these stocks, I want you guys to right now in the comment section below write down what ticker was your most successful stock of this year and how you found it. I just kind of want to gain your ideas and maybe apply some of your techniques to my trading. So let me know down below. For me, it was probably KL, which I captured a pretty big move earlier this year, right about here. But yeah, let me know down below what you traded. It looks like this actually is on the bottom of the list. But starting with CDLX, you can see that it had a monster run of about 480%, which is huge. However, there wasn't really a good buy point earlier in the year until perhaps in May. You can see you've got a week with quite a bit of volume coming in, about twice the average 50-week volume, which is a big change. And you've got a green dot as well. And you can see that from this point, you actually are passing through this kind of short-term consolidation of about 10 weeks. And then finally in this week, you break through that. So that could have been a good entry for you. But you can also see that even this big turnaround point is still below the last green line for CDLX. So probably around here is when I would start paying attention to this stock. And you can see there's a big up week here on, again, above average volume. And again, this is kind of just reinforcing to me that I should look at these weekly charts just a little bit more because, again, they're a little less noisy than the daily charts. So CDLX is finishing off the year pretty strongly as well with a nice tight consolidation here. So it's still potentially buyable. And remember that even if a stock goes on a huge run like this, that doesn't mean the move is necessarily over. So even though these are the top performing stocks of 2019, don't rule them out for early 2020 because they still could be going on an overall big move like Netflix had this decade of 4,000% or whatever crazy number that was. Now going on to ARWR, I've covered this extensively in actually its own market winners video, so I won't go into too much depth here, but definitely check out the video in the description if you want to learn more about ARWR and also the fundamentals that I looked for and why I kind of talked about this stock on this day where it's still from that point on went up about 60%. So moving on to Roku, another favorite in the FinTwit community. This is all crazy because I actually made a tweet a while ago kind of analyzing this stock, but let's get rid of those for now. This is another big winner of 2019. You can see it moved up about 350%. And I think the first buyable opportunity for me was actually right here when it broke through the green line on above average volume here. Let's switch to the weekly. And you can see another green dot week with about twice the average 50-week volume. So a key turning point here, and from this point on, it increased. Well, actually, that's when it dropped down a little bit. So from this point on to the peak, it increased another 100%. So again, just because you wait until it breaks through the green line doesn't mean you're going to miss out on a big move. And in my opinion, that's kind of safer than buying a stock that's down here that you don't really know if it's going to continue on the trend. So MDCO, you can see, is a gap up, so I won't talk about much about that. But EIDX is another recent IPO. And again, I think this is a similarity that a lot of these stocks have, is that they're pretty new. A lot of them IPO'd in either 2018 or 2017. And you can see it had its first green line breakouts. Let's make this green. About here. And you can see it's not the 50-week yet, so you don't know if it's above average volume. But on the daily chart, you can see that it broke through on above average volume on this day right here. So this is a start of its big move, and it was pretty loose here, so probably it's hard to stay in this stock. But from this point on, after it retested the green line and broke out again, it increased a further 100%. So once again, just because a stock moved a lot before its green line doesn't mean it doesn't have more room to travel afterwards. Now looking at ARWN, which is RVNS Inc., you can see that on the weekly charts, it is also a recent IPO, which was just in late 2018, and then it got knocked down by the overall market trend, which was negative this past October into December. And then after that, it kind of went sideways for a bit before kind of forming this top here in about July. And then finally, towards the end of this year, it's been rallying very strongly and actually broke through. It looks like, yeah, this is a green line right here because the stock rested for at least 3 months and then broke out right here. So let's take a look on the daily chart and see what we're working with. So once again, you can see this sideways consolidation. You can see it really sold off hard with a lot of down weeks right here, but then it rallied strongly and with a lot of volume coming in as well. And then finally, when you got to the green line, it broke through on above average volume, which is exactly what you want. And from this point on, it increased almost 50%. So once again, even though it breaks through the green line and moved a lot before that, it still had room to go. Now looking at INS, this was on my radar early this year, as you can see from this past trend line. And let's actually take a look. So this is actually kind of different than the other stocks because it's an older company from 1985, and you can see how long this green line took to be broken again. So going back to the weekly charts, you can see that it was on this day that it finally, well, this week, where it finally broke through this green line, that it set all the way back at its IPO. So even if green lines take a while to be broken, it still means that this is a serious inflection point for the stock. And taking a look at the daily charts, you can see it was jumping up, dipping down, jumping up, dipping down over and over again. And here it actually had a failure of the green line breakout. And then once again, when it rallied on above average volume, that's when it really took off. And from this point on, you can see that if you bought at this point and probably were stopped out here after it consolidated and then dipped down, that's a gain of about 35%. So another potential big winner for you in your portfolio. And you can see it kind of dipped down again, formed a cup and handle, tried to rally, and now it's just kind of coiling tighter and tighter while slowly going down. So I still think this stock needs some time to consolidate this big move that it had this year. Now looking at NRVO, you can see kind of a nice stair-step type pattern. It again was knocked down by the overall market late last year and actually started its decline before the overall market. but this year it's been on a massive tear. So looking at the monthly chart, you can see that it is just breaking through its past green line at this moment. And for almost this entire year, it hadn't. So looking at the daily chart, you can see that I guess on earnings, it broke through the green line on above average volume. And since then, it's just kind of been going sideways above the green line. So this is the type of stock that I like to watch because it's just kind of broken through and then rested right above the green line and could have the potential to double once again as it starts moving upwards, kind of like what RH did this year. So you can see it broke above the green line, rested for a bit, broke out a bit, dipped back down, and then made a, I think, 40% move here. So yeah, so this is a setup that I like to see, and it's something that I'm going to be looking for more often. Looking now at MRTX, you can see it had a couple green lines from 2015 and then formed another one right before the overall market dropped in late 2018. And then from then on, it finally broke through in early January, dipped back below it here, and then from then on had a nice run here, dipped back, and then finished strong. And from this kind of second retest, you can see that it increased about 90%. So another very, very good run. So MRTX doesn't really have the prettiest chart. You've got some nice consolidation here, but that kind of broke through on earnings, so you wouldn't really have a chance to take advantage of that run. And since then, it formed kind of resistance at this level here, dipped below, recovered, and then just now is breaking through this level here, which shows some pretty good strength in the stock. Now taking a look at Zyme, you can see that it is another recent IPO, and it formed its past green line here when it kind of went parabolic and then dropped back down considerably. However, since January, it's been growing pretty much non-stop and tried to break through the green line here, and that failed. And then finally on this week, on above average volume, it finally managed to break through that. And since that point, it's been going up steadily and is up 50% from that green line. On the daily chart, you can kind of see this more clearly. It tried to break through and then was knocked back down. And then finally at this point, it was up for a couple straight days and then had a very strong day on above average volume where it finally broke through this green line. And from then on, you can see it's barely rested. You had another potential entry right here, but other than that, it's just been going up very, very steadily. DCPH is another pharmaceutical company. A lot of these stocks that have these huge gains are actually pharmaceuticals. But you can also see that this is another recent IPO in 2018, actually 2017. And just this year, it finally broke through its green line that it set in June of 2018. But looking on the daily chart, you can see it was kind of consolidating right here all the way until August, where it broke through and gained quite a bit of value at that time. That was most likely either earnings or, since it's a pharmaceutical company, some type of news around a new drug. After that big break, you can see it rested for a bit and then finally started moving up on above average volume and then broke through the green line, rested again. This is kind of the setup that I like to see. You've got a bunch of green dots, some Bollinger Band entries, and since this point when it bounced off the green line, it has increased about 35%. Looking at CVNA, it's another recent IPO in 2017, and this year it increased quite a bit, almost 200% from its low in 2019. And after you've got kind of a massive correction in the indexes like this, you're going to have stocks that go on these very, very good runs. And that's why you don't really want to fear corrections, because they can play in your favor if you're able to kind of get out of the market and reduce your exposure and then jump in when the uptrend resumes. But anyway, looking at CVNA, you can see after it dipped down with the overall market, it recovered nicely, tried to break through this green line on this day, then finally did so a couple weeks later, but dipped back below and now it's finishing the year off pretty strongly. Looking at the daily chart, you can see these kind of failed green line breakouts, and there wasn't really a great entry for this stock. It's kind of volatile and all over the place, so there's no clear entry for me. Maybe if your strategy has some different methods, you might have found a way to profit off of this stock. And finally, to wrap up the video, we're going to end with Shop, which is a very popular stock, and it's actually ending the year with a nice kind of double bottom pattern. But let's look at the weekly chart for the stock, and you can see that since January 2019, it went up for the majority of the year and then finally formed this consolidation pattern. So this is a stock that is, in my opinion, primed for 2020. It advanced a whole bunch and now is forming a nice consolidation, getting rid of some weak holders, and now it seems ready to actually move up again after this handle. But anyway, in this year, it increased about 225%, which is a very, very good run. And if you just entered a little bit after it broke through its green line, you can see that you would be at substantial profit of over 100%. On the daily chart, you can see the time where it broke through this green line. There was some above average volume on that day. And since then, it's been bouncing up and down, but overall maintaining its uptrend. This is definitely a yellow band stock, as you can kind of see from this weekly chart. It was staying above its 10-week moving average for the majority of this big leg up. So if you find a stock that goes on this type of run, I would say if it's still a yellow band stock when you're considering selling it, maybe hold off until it breaks through either the 50-day moving average or the 10-week moving average, because that could mean that it's finally done with its run, as it kind of decisively did here when it formed this big consolidation. But that rule just kind of allows you to stay in a stock that's on a big run just a little bit longer. So overall, those are the top 10 or 12 stocks in terms of percentage gain of 2019. I hope you learned a little bit from this process. I think the biggest takeaway for me was to again look at the weekly charts a little bit more, focus on stocks that are recent IPOs in the past few years, and also to really focus on green line breakouts, because as you can see, even if a stock rallies quite a bit right before its green line breakout, that doesn't mean that the run is over. And a lot of these stocks went up 50, 100% after the green line breakouts. And the reason that you like the green line breakouts is because there's less overhead supply holding a stock back, and there's only buyers coming in. So I hope you guys enjoy this video. I've left a couple interesting videos related to this in the description that you should definitely check out. I think if you're new to my channel, you'll find them very useful. But anyway, thanks so much for watching. Make sure you leave a like down below if you enjoyed the video, and I'll see you guys in future videos.